Hello, friends. All right, this is liquidity narrative. If you've been trading for a while now and you're still losing money consistently, it's probably not because you needed a better or another indicator or a new strategies. Maybe it's because you've been playing the game exactly the way the market is designed for retail traders to lose. All right, so the good news is that today we are going to change that. So I say to you, welcome to Liquidity Narrative. So in this channel, we often map liquidity first and then choose structure over speculations. This week, in this first video, we are making a 12-week journey and breaking down the fundamental difference between how retail traders operate and how smart money concepts actually work. So the question is, what is retail trading? Let's start with the painful truths. You can see the charts on the left-hand side. Most times, the retail traders will put in a lot of indicators. I only put two here as an example, but most times you can see people having 4, 3, 5 indicators just to give them a clue of what to do in the market and how to trade. What if I tell you that you don't really need those indicators? You can actually read the narrative of the market and be able to get something in the market. That's how the smart money trade. That's what smart money concept is all about. So watch this. You can actually see that the market is already in oversold. So you need to buy. You can see both indicators are telling you need to buy. But then we haven't gotten the opportunity. What do? Do you just jump in to take a trade or buy? That's how the retail traders, that's how they trade. But smart money is actually looking out for something. They don't just trade randomly. They're looking out for something that will give them a clue on what to do and how to do what to do before they take the trade. Okay, let's take for instance, before the week resumed, we've already mapped out this area as the area we are looking at price to run into as our draw on liquidity before we get a reversal. Why? Because we were using the narrative of the smart money concept. You can go and check the video we made for the week about this. We mapped out this area both in Euro USD and British Pound USD. We've mapped out those levels. Those are the ways that the smart money look at. So we map out this just for us to see clearly, not because these things are in our chart when we are trading. So what are we saying? You can differentiate yourself from thinking like a retail trader and start trading like a smart money. Like we said, that the retail traders is exactly what most of us we are doing before now, and what most of us are still doing even at this moment. It usually look like this. This way, we've opened the chart, you've seen a lot of indicators, we are chasing prices, trying to get something, getting confused, trading the news without understanding how institutions positions around it. And what's awful, you have no real plan other than this looks like it might go up or it might go down because the indicator said so. All these indicators, you know that they lack, right? So why keep using them when you can actually study the market and know exactly what to do and take a trade without you being afraid? Does it mean you don't lose? No, it just means that the probability of your winning is much, much higher than that of losing. And then you take responsibility if anything goes wrong in your trading. So the question now is, what is smart money concepts? Let's talk about the other side, which is our right hand side, the smart money concept. Now, the smart money is not just, know this, is not just another fancy name for price action. When we talk about the smart money concept, it's just a way of understanding how large institutions, when we talk about large institutions, we're looking about the banks, the hedge funds, and the market makers, how they actually engineer price movements. Here is the key idea. The institution actually needs liquidity to fill their large orders. They don't just buy, they don't just sell randomly. They create inducements, they create liquidity. In those areas, we normally put our stop losses. So they create those liquidity and inducement, they move. And after price has collected those liquidities, price will reverse and get to the point or the direction it was meant to. That's when price got to this place, it has to respect remember, all that we are doing here is a programming language, right? They have to respect what has been programmed before now and reverse a bit before it could even continue on. So the key pillars of smart money concept that we will be mastering together, we'll be looking at liquidity. Your question might be, what are those liquidity? What are the things you look at liquidity? It can be your highs, it can be your lows, it can be your equal highs, it can be your equal lows, the previous day, the previous week, extreme stop losses cluster day, and that's what they required. We'll look at the market structure, the market structure shift, yes, and the, what you call maybe the change of character. We look at all those things. We look at other blocks, just like we've mapped out even in these particular levels, the areas we are looking at. You can see all this level has been mapped out as areas where money might likely reverse. We look at the fair value gap just as market respected this level, then the narrative and bias. We understand the higher time stories and how it shifts. Remember, this isn't about predicting the future. No, we are not promising you that we predict the future or how the price is going to close or what must happen without you losing. It's just about reading the market's intention through liquidity and structure. That's what we are here for. So look at those two, like we said, comparing these two charts. Which one will you prefer? Which one will you go for? Let's make this clear with these two. The retail traders, they chase price because you can see if you look at it, say, oh, there's a breakout trade here. I'm going to take the trade because the market has just changed. There's a breakout, and you took the breakout. At the end of the day, the market reverses and then takes you out. So but why the smart money actually know that there is liquidity that lies on those levels. So they are not chasing the price. They're just going to wait for price to do what it should do before they come back to take their trade. Sorry, just trying to get a clear stuff. You can see, look at clear stuff. So that's the way it is. The retail traders, they trade on emotions, they trade on fear of missing out, while the smart money, they trade with a higher time frame bias and then the lower time frame confirmation. These are the things you will learn and understand. Most times, the leisure trader, they don't have clear plans. They just know that the indicator said buy, the indicator said sell, and they jump into the market. But the smart money traders, they follow a structured narrative. So don't gamble. Don't gamble because the retail traders, they gamble on direction. Smart money knows that there is draw on liquidity and they wait for that. If you understand those things, these shifts in mindset is what separates consistent traders from those who keep blowing accounts. If you understand those things, it will separate you from those other people that are other retail traders. You be thinking like a smart money, even though you're a retail trader, but you think like a smart money, you trade like a smart money, you take advantage of it. So especially in this 2026, this approach is more powerful than ever. Why did I say so? With aggressive trading dominating the market, liquidity engineering has become highly predictable. And once you know what to look for, you will know exactly what you're doing. Like the central bank, the large institution, all of them, they all operate around those liquidity levels that we mapped out. When you learn to see the market through this lens, suddenly the charts will start making sense. You will know exactly what to do. You know what? The good news is that we are here to help you understand better. So in this next 12 weeks, we are running a series to help to build you, take you from the confused retail trader to someone who can read market narrative and take trade with structure. So the next week we are dropping our next thing for you to learn. Normally on Sundays we map our liquidity on what we think that the market is going to do, like all these things we are mapped out on Sundays. So if actually you are committed in changing the way you are trading, drop a comment in the comment section and let me know that you are joining us in this journey. And remember to hit the subscribe button and then trade the structure, not your emotion. All right, I will see you again next week as we build on this fundamental that we've already laid out here. Thank you and have a lovely time.